All right, I think we're gonna get rolling here. Just if people come in, they come in, and we'll just keep this rolling. I'm not gonna keep you any longer than a half hour here, hopefully even less than that. This is gonna go pretty quick. I'm just more or less telling you why, what we're doing. Most of you are familiar with this project because you're all subcontractors. Of course, we're doing a lot more of these in the future. So this gives us a time to kind of show you how this works, and maybe you're curious. And this is a great, passive investment that you can contribute some of your contractor funds to. So most of you have selected because you're the finalist in this investment. So a little bit of background about me, though. I've owned Mac Construction for about 11 years. I've spent a lot of time in real estate, obviously in the construction world. We're building real estate or developing real estate, and basically the last 5 years I've done a lot more work buying real estate, owning it, renting it, you name it. And basically I've got sick of paying taxes. Owning real estate's good for not paying taxes. And I just wanted a passive income source that if the construction company ever failed, that, would always have income coming in, right? So I've earned most of my wealth in real estate. Some people only know me as a construction company. However, it's honestly been my real estate that has grown most of my wealth. So I want, most people don't know that. They just know me as Mac Construction, and that's fine. That's good. So I do have things like 401ks, and I do have things like I invest some money in the stock market. Really, the reason I invest more in real estate and why I'm doing all of this, right? Because you guys probably seen me pushing more projects like these, is because there's no one in our area who does this. Basically, you have everyone's like a one-man wolf pack around here, and no one gets together with partners and does real estate in our area. And I don't know why that is. Of course, a lot of the investors are farmers, and they kind of enjoy us getting together and bringing projects like these. But real estate's not a one-man game, is kind of what I'm getting at. And it takes multiple people to get that come together to build these projects. I mean, you can imagine a skyscraper in New York, or maybe a building in Las Vegas. There's thousands of investors in that project. It's not one guy who built it. Most of these projects, even Donald Trump, there's more than one than just Donald Trump in those buildings. So and then obviously with Donald Trump being a billionaire, that he doesn't pay any taxes. And why doesn't he pay any taxes? Because he owns real estate, and he accelerates depreciation for real estate. So, of course, that was debatable in the election. So, but it's very smart. He's using the benefits that the government allows him to do. And he writes off a lot of his income into real estate through depreciation. So it's just smart. And they allow us to do that. And it's just a very different than saying, let's invest in stocks. Okay, let's go buy 10 Tesla shares at whatever it is nowadays, $1,000, and it goes up. What do we buy? That would be $10,000 worth of Tesla shares. It'd be worth about 10 grand. And if it goes up by $100, boom, we have an extra 1,000. However, we sell, we get capital gains on that sell, right? We pay taxes on the $1,000. So, and I know, so a lot of the reasons, I'll get into more. I just thought I'd give a little background on why I'm doing this, who I am, what I've done. And we have a lot of units planned in the next 2-3 years. I'm going to be at 1,000 units in the next 8 years. That's my goal. And we have about 250 already planning for next year. So, and a lot of these will host these same webinars. You guys will all be in that, I hope. And we are selecting subs that want to continue working with us, and maybe have also an interest in investing with us in these projects. So if, we want to work with you guys. We want to take a competitive bid. Of course, all these have to competitive bids because everyone's an investor in the project. They want the best price with the best performing results. So We want to get the best subs. We want to give you guys a chance. And, this is kind of a smaller project. It's not small, it's $4 million project, right? But it is, it's a great cash flowing one. It's not shiny, it's not big, but it produces some nice numbers that I wanna go through with you right now. So what I got up here, I think y'all can see my screen okay. Hopefully you can. Says Thames Crossing. And kind of a summary, basically we have 2 8-plex units that are going to be brand new built up in the Thames Court area. And then we also brought in 6 existing townhomes, standalone townhomes, and we'll go through that. Kind of through here, you can see the property numbers. The location is the northwest corner of Grand Forks. Like I said, most of you are subs, so you probably understand where this is at, or you've probably done work in this area. And so if you kind of look here, we combined on the orange, we combined those lots into one lot, and that's where these 8-plexes will go. So floor plans, most of you have probably seen these. Some of you may not, and I will share these with you guys when we're done here, but I'm kind of scanning through, just pointing out anything important. The most unique thing to this property is that the exterior images you see here is actually just flip-flop to the other side. There's really no backyard, so to say, in these. So everything is back to back. So 4 units on one side, 4 units on the other. And that would be the 8-plex. So that's kind of unique. It's not, I don't know. We see them once in a while, Zach and I do, but it's kind of unique, and it kind of works in this area because we have roads on both sides. So here's one of the units, 826 Thames Court, central AC furnace, 3-bed, 2.5 stall. I think we get 14 or 1550 a month for that unit right there. And all these are actually currently occupied and renting currently. So 834 Thames Court, a 2-bed unit, same area, 842 Thames Court, neighboring these 8-plex units, 1024 and 1008. Are two units near, and both 2-bed units, 3 stories tall. 1002, there you can see an end unit, 3-bed, 2.5 bath, 1 stall garage, that are heated. And these all got new mini splits put into them, so they'll just be a nice rental unit. In this area of town, just to sort of say, we really get a lot of the VA people because they have to be 15 minutes to the airbase gate. So we get a lot of long, consistent renters in here, which is kind of nice. And it really creates consistent, just consistent rental over there. There seems to be a demand, and because of that VA, we're also close to the university. That helps as well. So sources and uses. So building costs is about $2 million. The construction and developing fee, basically it was some pressure to get this through the city. We did end up getting it through with a bunch of work. We have land costs. So total hard costs, we're in for 2.6. We have the 6 Thames Court units, which averaged about 200 grand a piece. Interest on the loan, the construction loan itself. The financing costs, so this is all really hard costs, right? Is $9,000. That includes your appraisals and surveys. We had some engineering, getting the pond developed and the 8-plex site developed. Builder's risk insurance. We also have a lease up fee in there to help get these things leased up right away. Legal and accounting to get all the partnerships stocked. Real estate commission on selling the land and the units. And then we have a contingency of 40 grand. Just everything's been fluctuating. We're trying to get everything secured. So we are open, both buildings, July, I think we're shooting for July 15th, I believe is what the schedule says right now. So we're going into action on these right very quickly. So let's see how we're doing on time here. So here's some 10-year cash projections. And again, I'm going to give you these guys. We're not going to go through these highly, but you can kind of see year one. They call them all the way to the left here. You can kind of see the gross potential rent. We figure in the vacancy. We figure in some other rental incomes, and then the total incomes, the net income, I should say. You got your expenses listed, and you come to your net operating income, which is an important number. And then we have to deduct some capital reserves just in case anything happens, or flooring replacement, whatever. And then we have the debt service, which is the loan. And then the asset management fee, which is me controlling, getting you the funds for this project, and watching over it as I am your operator and you are the passive investor. And then you have a net cash flow of 114,891. So again, you're going to see kind of unique in this one. I got an interest only period that got extended for 12 months or 12 months on the existing units and 18 months on the construction. So I actually get more of a better cash on cash year 1 and year 2, and then it kind of drops into year 3, which is where we would look for a refi possibly. And that would help actually get some of your capital back out of this. And that's all if market rates are good, maybe rates. I honestly don't think rates are going up. That's my opinion. I really don't think with what the president has done with the inflation, printing money, I really don't think he's going to be able to hedge up rates very quickly again. But if we just hold on to this property, you can see it perform 14% cash on cash, 9%, 8%, 9% year 4. So again, you'll get this so you can review it more in depth. This is just a breakdown of the net operating income, which we went through. We have a build cost of just under 4 million. So actually our appraisal target rate was 4,060,000. So we're about, I think we're almost 100,000 in the plus. I think it was like 80,000, whatever, is what it ended up being into the plus already, just starting the project. So that's nice. And then you can kind of see in the green here, I have the 10-year IRR, and I'm going to show you what IRR means and versus the cash on cash. So of course, at the end of this sale, right, we're going to have a exit net proceeds, which is kind of on the bottom right of this. You'll see that 2.779, 2,779,000. That is going to be the rate at which when we sell, we're actually going to liquidate those into the partnerships based on how much capital you have in. So just some key things I want you to look at and kind of understand this, and maybe you may need to read through this more. And if you have questions, of course, reach out to me. So debt service, a little more for the banks, not so much, probably more cash on cash adjustments, and kind of your adjusted return on taxes. So how we're figuring that is we're all going to get depreciation on this building, and it's going to be more than the cash that we send out every quarter, because we're going to accelerate the depreciation. So it'll be no difference than you buying a work truck and section 179 it, you're writing off 100%. Well, in real estate, you can't do quite 100%, but you can accelerate the depreciation in the first 5 years. So you can actually get cash flow on your capital in and actually get a tax deduction at the end of the year. And it may be a loss bigger than what you even took in for cash flow. And so it'll actually go against your money you made W-2 income or whatever, money of your business owners. So however you do taxes. Again, every tax situation is different based on the individual. So you can run it by your CPA and what you're doing. This is very common. A lot of people do this, whether you guys had an opportunity to get into a project or an investment like this, but this is very common. Your tax person will be able to direct you on what it looks like for you. Kind of our rent breakdown is at the end of this, and $1,550 for the 2 beds. We're $1,675 for the 3-bed 2 baths. And those are the new units. The existing units, we went conservative at $1,350 for the 2 beds and $1,450 for the 3 beds. And I believe that we're actually already making more than those rents that we have projected. So we kind of use the Empire model. They're probably a comparable style townhome to ours that we're renting out. And I think some of their units are even up over $2,000. Dave would probably know more about that than I do, but yeah, these are conservative numbers. So just keep that in mind, because obviously when you move rents up, your cash return goes higher as well. So I'm going to exit out of here. I think everyone can see my screen still. I'm going to run through just kind of the things on why we're doing this real estate project. And I'm going to run into a calculator here at the end, and then I'll open up for a little bit of questions. But the main thing we're doing in real estate, right, is volatility. It's recession proof. It's not recession proof if you're over conservative. If I would have said all those rents should be $2,500, you guys would all call me liars, and they probably wouldn't operate, right? But I wanted conservative rents. You already know we're fighting budgets, right? We want this thing to operate and needs to cash flow. I can't get other investors into this project that are just bringing capital in if the project doesn't perform. And that's no different than projects going forward, right? So they have to be competitive rates, but we get good cash returns. And when the market does head south, which I don't know that'll be anytime soon, but it could be, right? And we have to always be prepared for that. We don't over leverage these projects. We make sure we're getting the best long-term terms, so the best interest rates. And honestly, the IRR, which you're kind of seeing real estate at 11% on this one, our goal is always, 16 to 23. Sometimes you get a really good one better than that. And depending on the size of the project, you can get a little less than that. But most of ours are anywhere from the 16 to 23. I think this one's performing right around the 20% area, the way we have it shown. And it's kind of a unique time right now with this building. There's all sorts of demand, but there's no buildings out there. So you got inflation up over 4%, almost, I think it touched 5. They're saying it might go over 5. And that's what they're projecting or telling us. I think inflation honestly is 8, 10, 12%. You guys seen your supplies and materials all over the freaking board. And the unique time about right now is that interest rates are literally at an all-time low. So you got materials way up here, or you got inflation way up here, and you got your interest rates way down here. And at some point, there's going to be a big inflationary period here. So, if we look to exit a building like this, I think usually around a 3x return, if we can turn your 100 grand into 300,000, we feel pretty good with that. And I know most investors would, so we would look to exit only at that point. And then you can look to actually 1031 into other projects to avoid taxes. The goal here is always to avoid taxes. And you'll hear me say that forever. And then also something unique about real estate is that we actually get to use banks' money. When you go buy $100,000 in stocks, whether it's commodities or whatever kind of stock you're buying, you really don't, you only have $100,000 of stocks, right? If it goes up 3%, you made $3,000. Now in real estate, your $100,000 is actually worth $400,000 or $500,000 because you're leveraging it. You're borrowing 75% of it. So you get a bigger exposure, a bigger chance of return. And you could be, if the stock drops 3%, you lost $3,000, right? So it's like, just real estate has you're able to leverage money, which is kind of I know with stocks, you can use margin. That's a term where you're borrowing against your stocks, but honestly, that's a rat race right there. You do not want to get burnt up in margin. You can actually borrow against your stocks. However, when your stocks go down, they call for your margin and they take it over. So they start selling your stocks for you at low prices. So with most all of these projects we have are recession proof. If the market goes down 30%, all these buildings go down in 30%, doesn't mean we're going to be asking money from you. It means that you're just probably not going to get as much cash flow as you initially wanted, right? And we're probably not going to see appreciation for a little while. So we're going to hold on to this investment. Let's see here. Sorry, wrong way. Appreciation. I've obviously been saying this. So we're obviously getting cash flow every, I think if you're over 100,000, we'll give out cash flow every month. And that'll be an ACH to your checking for your investment amount. If you're under that, it'll actually be quarterly, just because it gets to be a little monotonous if it's under $100,000 for us. And we actually do that in-house within our accounting team. So they actually handle all of that. You can just call us directly and ask, hey, what does this look like, or what, where this project's at. So you can get in. Basically, we just send out distributions. Everything's ACH, and we have a investor portal where you'd actually log on and be able to see how your investment's doing. So, forced appreciation, I think you guys all know what that thing's. Rent goes up. I've never seen it go down. Maybe it's hovered, but I don't think I've seen it go down every month or, anything crazy like that. So, like I said, I think we're very conservative with our rental rates right now. And that's very important for us, making sure we're in recession proof is what my main goal is. I always want to preserve capital. That's my main thing, investing in real estate. So cash flow and cash on cash. So I just kind of went with a quick breakdown on what this is. Cash flow is the amount of cash property produces while they're in the hold period. So if you say you're going to give $100,000, right? I'm just going to use $100,000 because it's easy. If you look here on the right, you can kind of see the breakdown of expenses, NOI, your down payment, the amount of cash needed to close on a loan for a project like this. Anyway, you get to this 9% number, and that is that amount of cash flow versus the equity amount. And so you get 9% cash on cash, which means you would be returning about $9,000 of cash flow per year if you did the $100,000, right? And basically that is just cash flow. It's like a 401k. I always say this as a 401k because it's like a 401k that builds money. Basically a 401k, you just keep feeding money into, right? And then it's supposed to compound over time. Well, it does that, but cash on cash will actually pay you every month or every quarter. And while your 100,000 is still appreciating, right? So I'm going to pay you that $9,000, but it doesn't mean that 100,000, we all know that rents go up. That 100,000 is still going up in value. And so our returns are, like I said, the IRR, which is the important one I wanted to explain on the next slide here, is that our IRR average is 20% on this project. So that's like making 20% year over year in your stocks, right? But not on top of that, we're also giving you a depreciation at K1 that says you lost money on this. So now you have it's almost like handing you actual cash that's not even taxable, right? Like if we were to do a cash job that's off the books, you would say you're not going to get taxed on that money, right? Well, that's kind of like our IRR. You're getting your money tax free, or you have depreciation paying down your taxes. So hopefully, if you may have more questions on that, but hopefully I kind of helped you through that. And so the tax secrets, a little bit of what we worked through. Sorry, I think I'm running a little bit long, but all the cost segregation, the bonus depreciation, 1031 exchange. I have this. I'll be including this to you guys in an email. But I also, at the end here, real quick, I wanted to share a calculator. So I have the actual pro forma. Of what this looks like. So guys, these are all the numbers we use to get to how we calculate one of these projects to work, the 10-year financial pricing analysis. And then I kind of made a calculator for you guys. So a lot of you may ask, okay, Mark, whatever you just said with all of this, what does it look like if I put in $100,000 or $50,000? So I'm going to try and get you guys a calculator that I can just send you so you can know what $50,000 looks like, what $40,000 look like, or whatever. So right now I have $100,000 up on this project, and what you could see annually would be about $10,000 because we have an average. And this is an average over the 10 years, right? We're averaging 13% cash on cash over the 10 years. And so you would see about a $10,500 per year. So $871 monthly would be deposited into your checking account. And then while your $100,000 is also working and providing you cash flow, it's appreciating, right? So at the end of that, and our goal is always 3Xing your money. A 2 or a 3, 2.5 to 3X, that's a good That's a good basis for our investments. So your 100 grand now turned into 276,000, which provides you actually another 2 grand monthly on this investment. So I think we're over 21% year over year actual invested money. So you're actually making about 21 grand per year on this type of investment. So, and like I said, we ACH everything, all your investments will be in a portal. You'll have a login to a portal. And I actually do weekly updates on per video on each project. Also new projects that we're going to have. So, anywho, I'm going to turn this over to you guys. You guys have any questions on this? I know I kind of screamed through that, but you guys can also reach out to me and we can have a half hour together on what your investments look like and what different, how this project looks. Maybe we can talk about the future projects we have going on too. Love to hear from you. So anyone got any questions or your brain hurt now?
Mark. Holly here from Grand Forks Heating.
What's that?
It's Holly here from Grand Forks Heating. Just had a couple questions for you.
Yeah, you got it.
How many current units do you have now?
In our portfolio?
Yes.
So right now this is 22. We have 80 that we're managing. So everything's managed within our company because we want to know in Grand Forks, there's no third party option. And I'm pretty picky if you know me about our properties and what they look like. So actually CK Agency, which is our in-house company that operates all our units. But at the end of this year, we'll have 100 under management.
Okay. And are they all currently rented?
Yep. The 80 units is a current project we're already managing and taking over, and that is 5 existing units. It's not all development. Again, we buy units as well with other investors. We don't develop everything. Developing just takes so much time, right?
Right.
But it gives the main reason I'm doing this is because no other person, you can go out and buy single family homes, you can buy duplexes, fourplexes, whatever. You can do this all yourself. However, you buy a fourplex, one renter moves out, you're down to 75%. There goes all your cash flow, right? So this gives you an opportunity at a bigger project. There's no reason to put yourself through the pain of operating 4 units from your one cell phone and run a business, right? So I want us to get into bigger projects. Like I said, I have a 150 unit project that's coming to Grand Forks. I want the smaller guys and my subs who follow us closely to get in these projects with us as well. We also have outside just passive investors for these. So it just gives us an opportunity to come together and do a bigger project that is, it just has it's a safer project because it has more doors, lower vacancy, right? And vacancies have been very low. Where do these people come from? They're coming. And actually Brandon Boczynski in the Grand Forks market is doing a good job bringing new businesses here. And so we're really happy with him. And he's Grand Forks market has to turn around, right? Fargo market maybe booms a little more, Sioux Falls. So there's other markets we're looking to build in and or buy in, but Grand Forks, this is mainly my Grand Forks crew here. But we are looking at other areas as well. So it just gives us an opportunity to get into a bigger project together. That's kind of the main thing of what I'm assembling.
You're going to do pre-leasing so that these will be filled prior to them being ready, correct?
Yep. So one building we're hoping to be open by mid-June, and we're hoping to get a unit or 2 finished. At least 1 unit would be nice to pre-lease, but we have our property manager is pretty good at leasing units, so he's already been on the ball with releasing these, and we put in some marketing money for him to get these filled up. So like I said, I think we're comparing these to probably Empire townhomes in Grand Forks, right? A little bit on the luxury side of things. These have nicer amenities, and actually our 2 beds are actually 3 beds. We just can't mark them that way because we don't have a means of egress. So we're calling it an office space. So we potentially could probably get a little more rent for our 2 beds in this.
Sure.
But I went super conservative with everything. And if you don't think I'm conservative, for some reason, once you get, I'll be sending you guys all the information that we went through here, so you have more of a chance to review it.
Well, I think it is a little bit conservative just from me knowing Empire stuff. So, did you hear me, Mark?
Yep. I agree with you. And that's kind of the closest one we saw for these townhome projects, right?
Right.
Of course, 150 unit building, we're attacking more of the multifamily, bigger 4-story apartment complexes.
I got
And,
2 questions real quick.
Yeah.
What would be the deadline to invest,
Yep.
or a date for a deadline?
So I would like to know, I said I need to know. So here's what I need. I need at least an amount by Friday, or if you want to, right? And if you want a chance to get on the phone, I probably have till the next week to be, you can lock in the amount, but if you want to invest, and I want my the subcontractors that are willing to invest beside me in this and in this project, of course, is going to get the better opportunity of getting the projects, because Cody and Zach are both throwing out subcontracts very soon. So I need to give them who's working with me on this, and I'm going to be telling them, hey, let's lean towards these guys. They're willing to invest X amount, whatever. So we kind of all work together. Zach and I are obviously working very closely on this, to make sure that we select the subs that want to invest and want to move forward. Obviously, we have a big future with this going forward. So Friday, I'd like to know an amount and a date, if you would like to. I probably give you till next Friday to secure that amount, but I need to get an operating agreement done. In how your investment would look like is you would have you basically have a subscription agreement saying all the people that are in this deal with us and the percentage of equity. So there's 800,000 that we had to come up with to get this project going forward, right? And I came up with that amount, and then I actually bring my investors in afterwards. It just works easier because I'm securing the loan. Right now I'm the biggest contributor. And then I bring in passive investors, and I'm bringing in subcontractors. So, and then you guys, though, you would have a contribution agreement. Basically, if your contract was 100,000, 15,000, whatever it is, and you say, oh, I'd like to do this amount, basically your last payment, or when you go to request for your payment, your last payment will actually, instead of going to you, it'll go into the investment as equity. If that makes sense.
That was another question. You kept mentioning 100,000 per visit for example purposes. What is required for a minimal investment?
Yeah, good point. I guess I never really thought about that. But I would say if it's less than 10 grand, it might get tough for us. Just because we got to put out quarterly distributions and things. So we'd probably hover around 10 grand. I can only bring in 10 investors total if I bring in too low of an amount. So I don't want to take a $10,000 investor if someone's willing to put in 50 or 75, right? So I think we would probably, let's just set that at 10 grand. That was a great questions. Thank you, Dennis. Any other questions, guys? It's, and like I said, you can feel free to reach out to me. And if you want to go through this again or have more questions, I completely understand that.
Say, Mark, I got a question.
Yeah.
Do you have other subcontractors that have invested in this that we could talk with about this sort of investment?
So this one is the first project that I'm developing with other investors, Rick, and so it's honestly very simple. I guess it would be no different than you contributing capital. Just in this instant, like you're still looking like you're getting paid. We're using 100,000 example. You get the 100,000. You're still looking like you're getting paid 100,000, except you're contributing whatever you say it's 50. You're going to contribute the 50 to the project as equity. And that just means you're investing in the project. I like that as a developer, and I'm honestly, my biggest goal here is get you passive income and have the project perform, and then we just keep kind of going with this, right? Like in Fargo, a lot of times it'll be the biggest. I think it was Magnum Electric and Precision maybe as the, I think, all finish, and then a big general down there. Those 4 guys, or maybe it was 5 guys, and they would all just contribute their whole capital of their project. And then that would get them enough capital to build an apartment or whatever. And they just kept going with that. And so that's how those guys did it. I'm actually bringing in subs and letting smaller amounts come in. So, you know, this isn't a very uncommon model, I guess, and very common in the fact that we all have aligned interests, that we want some kind of passive income. We like the investment, we like the work, we would like to keep maybe going with this, right? It gives you, you're buying actual equity of this building. You're not just buying the debt. So that means when we refi, say you have your 100,000, we refi in year 3, and we actually give you, say, $55,000 tax-free, because it's just like refining your house, right? In 3 years, if it's worth more, you can refi and pull out that capital tax-free. You still have your initial $100,000 capital. You're not losing that. Your equity in that position in this building is actually still true, right? Some investors say when they return your 100 grand, you're out of the deal. You get no more cash flow. And that's called a debt investor. But you guys are actually get the opportunity in this one to buy. I'm only giving equity positions away. And so you'll actually own a percentage, right, of the 800,000. If you did 80,000, you'd own 10% of the project, right? Does that make sense? Does that clear some things up?
Yeah.
So it's a little different, but it's, yeah. Yep.
Sorry. Dave is wondering when he could meet with you personally.
Yeah. We can, I'll text Dave here when we're done,
Okay.
and we'll set
Thank
something
you.
up. Yep.
I would also like to meet personally,
Okay.
and I would bring in, I guess, my wife.
Okay.
So if we can set up a time for that also.
Yep. I'll reach out to you, Dennis. Do you want me to call you just this
Sure.
afternoon? Okay. Dave, anyone else need like further? It's nice to just get on the phone if you guys are interested, but still don't really understand. It's kind of a lot thrown at you here in a half hour. So now we're running a little long. So does anyone else have any other questions, or anyone else want me to give them a reach out and kind of go through this a little further?
Yeah, Mark, when you can, maybe Wednesday or Thursday, give me a call, please.
Okay.
Perfect. Thank you.
Will do. All right.
I got to jump off here though, Mark.
Yep. I'm jumping off as well. You guys, anyone else, any other questions?
Nope. Thank you for your time.
All right. Thanks, guys. I appreciate you. Thanks for joining.
Thanks,
All right.
Mark.
See you guys.